Good morning. Hey there, boo-boo. Let's get the pips from the piglet basket. Welcome to Forex.Today, the YouTube community of more than 21,000 subscribers. Today we will conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money that you cannot afford to lose. Stock market is about to open. Have you decided whether you are a bull or a bear? Huh? I hope so. Wow, gold jumped just this morning, huh? Look at that. Since earlier today, gold went from a 7 to an 11. Whoa! Markets are mixed, but you should not be. You should know if you're a bull or a bear. If you are a bull on these things, you want to look to buy dips. If you're a bear on these things, you want to sell rips. Pretty simple. So obviously, we look at multiple time frames. Oh, yeah. So you have to decide, is it a scalp, spot, swing, carry, or position? So we're about 27 minutes away from the ding, 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 ding. Let's get a news update on our sentiment radars.
Mixed market sentiment as tariff uncertainty weighs. Canadian dollar little changed on the day. Scotiabank.
United States Red Book Index year over year, 6.6%, April 11th versus previous 7.2%. U.S. dollar consolidation extends as risk appetite improves. Scotiabank.
Euro U.S. dollar price forecast. Buyers paused amid tepid German data, limited downward scope. Yen consolidates multi-month haven-driven rally. Scotiabank. New York manufacturing index rebounds more than expected. In April, U.S. dollar Canadian dollar climbs to near 1.3900 as Canadian inflation cools down. Pound pushes to fresh highs. Scotiabank.
Euro quiet on mixed ZW data ahead of ECB Thursday. Scotiabank. Cool. Looking at Canadian inflation, 2.9. All right, that's still a bit high, but it's less than 3. Good job, Canada. German zoo, we got that negative number, and euro is very weak at the moment. Empire manufacturing, yeah. I mean, better than expected. Cool. Right on. We're good with that. Is it a meaningful thing? No, not really. The Canadian CPI was the big news. We know that because we've analyzed all these different news events that have come out today, and this is the only one that matters, the one that came out 35 minutes ago. Came out less than expected, and there's no scalp on the Canadian dollar today. Not based on what Canadian CPI has done in the past when Canadian CPI is less than expected. There's no scalp. Okay? There's no scalp. Yeah, that's that. There just isn't a scalp that's reliable and repeatable. But notice what does tend to happen, or has happened in the past. A big a big spike up, and then a collapse. A big spike up, and then a collapse. A big spike up, and then a collapse. No spike, but a collapse. Oh, and we have a bit of a spike. Is there going to be a collapse? I don't know. But it's good to have the information, though, isn't it? So we already know there's no scalp. So it analyzed this. There's no reliable, repeatable scalp. But what it does show is on the 12-hour, so you back out a bit, and it usually is lower 12 hours later, irregardless of the spike. Isn't that cool? Oh, yeah. So it's a good news scalping pattern radar, huh? Doesn't predict the future, but it doesn't forget the past either. Cool. And this is only in situations in which Canadian CPI comes out less than expected. I mean, it's pretty good data. It's really good data. Yeah. 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 Little skippity, scalpity, tickety, bippity, boppity, boo. Skippity, scalpity, bippity, boppity, boo. Let's look at trades 70% or better for the stock indices. FTSE back to resistance. So double bottom, higher high, higher low, gap up. So we believe, based on seeing this type of thing before, 80% probability it gets back to resistance. After that, I don't know. We only know, like, sort of fill the gap kind of thing. Back to 8,700, huh? Yeah, it should take a couple of days. Interesting. How about commodities? Non-directional. So this isn't a trade setup. This is, okay, if you are a bear on gold or on oil, you can scalp it down to $60 a barrel. Now, a day trader or a swing trader would look for that to happen and then sell the lower high. So the first one is a scalp. The second one, like, scalp the break of the apex. The second one is, with the new lower low, sell the new lower high, probably right around the same price. Same trade, but maybe different, right? Different risk. What about crypto? Yeah. All right. 78% chance we get back to there. It's such a little bit of money, huh? It's just tiny. But what it's saying is, hey man, we're at 85,750 and we should get to 86 and a half. All right. All right. Well, okay, $750, which is just a little skippity scalp on our friend Bitcoin. A lot more to analyze here. So, what do you think when it comes to like this pound dollar? Are you going to trade? Hang on, let me get my drawing tool out. Let me make my drawing tool a little thinner. Let's try this. Are you going to trade this? Is that your day trade today? And then your swing trade, like that the rest of the week, maybe? What do you think? Okay, we have the breakout, pullback. Are you going to be long and gone today? Long at 132, going for almost, anywhere between 134 and 136. So this is, even though it's coming up on a scalp, this is a good swing, isn't it? We're looking at, it's expecting 200 pips, maybe 450 pips. So obviously there's going to be some pullbacks over time. What do you guys think about this one? This is where you start threading the needle and drop into a small time frame and try to ride that moving average up. Isn't this nice? Remember, it's not predicting it. It noticed the break above resistance. Okay? That's what it noticed. So the other patterns in the technical section, they're things that have not formed yet. They're in the process of forming. These have actually broken out. So this USD CAD to the upside actually has broken out just now. It's not like it might, it is. It's not like this might make a higher high, but put it this way. If this was still forming and we were below resistance, let's say we were here, what are the two probabilities? Up and down, or up and up? Would you agree with that? Of course you'd agree with that. So at that point, we don't know. So it would just say, hey, did you know there's resistance here? Oh, yeah, maybe you missed it. Maybe you're not looking at the hourly chart. Maybe you're stuck on a 5-minute chart and missed this. Well, this is the heads up. But in that situation, when we're not sure, we would be up. That would appear in the technical radar section. This is scalping, so it's saying it has already broken. Or it looks like it's already broken, right? So now it said in situations that we've seen in the past in which we've risen up to resistance and then broke resistance, in the past when we saw this, 76% of the time, it went into the green box. Is that relevant information? Irrelevant. Resistance is futile, right? Irrelevant, really. Oh, look at all these wonderful, wonderful little patterns going on in the Forex. Okay, cool. So why are we gathering here today at this time of day? Well, because it's a good time of day on Tuesdays to be trading. You know, there was a time when I mentored traders, and one of the most common mistakes I've seen as a mentor is people traded at the wrong time. They might have had the right general idea, and then they got mediocre results. And so I would ask them, I said, well, why did you place that trade then? Oh, that's when I get home from work. Oh, that's when I'm done feeding the kids, doing the dishes, doing bath time, reading stories. And once they fall asleep, I have 45 minutes where I can trade. So I run downstairs, I open my laptop, and I look for something to do in that 45-minute window. Versus trading when the setup has made sense. You see that? And so this will help you plan your time of day. So if you're like, okay, on Tuesdays, first of all, Tuesday is mediocre, but you might be able to hold it into Thursday. So you're like, okay, maybe I can swing this. Okay, what time of day should you get up and trade? Your trades should be in between 6 and 8 in the morning, New York time. Oh, guess what? This is when I meet with our team. Cool. So this is when you should be trading. And this tells you is if you enter that trade here on a Tuesday, maybe you can hold it till Wednesday. Oh. But often what you'll see is traders will make most of their trades in here when nothing's happening, or in here because this is the only time of day they have. Okay. Now, again, if you're doing Asia fade, that's okay because you're catching this, or I guess really you're catching this. Okay. So you not only do you have to do the right thing for the right reason, you have to do it at the right time. Hey, it's just that easy, huh? Yeah. Well, maybe use limit orders and use higher time frames. So one of the other mistakes is that person that can only trade in that window of time, they're using 15-minute charts with 5-minute charts. I'm like, dude, you're entering at a dumb time of the day. It's dumb. So you need to remove the time element as much as possible. So you need to basically day trade and swing trade. You need to be in trades minimum 3 days. If you only have certain times of the day, even if they're not good times of the day, well, as long as you're buying this, you'll be fine. Right? Even if you're trading here, and even if you're trading here, and even if you're trading here, well, as long as you get that. But if you're intraday trading, you're scalp and spot trading, you're getting nowhere on this. Okay. Cool. So that's cool. Back out of your 15-minute chart, maybe start learning how to swing trade properly. We do that on Thursdays, by the way. And why do we do it on Thursdays? Because we're planning on trades that you should be in Monday, Tuesday, Wednesday. Oh. So if you were trading this Aussie CAD, check this out. Okay. You get sort of a fizzle out. So this is why we plan Thursday and Friday. It fades. And then what? By Monday, you should already be in. And looks like peak is a week later. So an amateur thinks the trading week is Monday through Friday. That is not correct. A better trader would say, oh, it's Sunday to Friday. That is better, but still not correct. Right? So Fridays are the worst days, but you buy the dip, don't you? So you might actually be in Thursday and Friday or Monday at the very latest and hold till Wednesday to Thursday. This is in particular to Aussie CAD. CAD Swissie might be slightly different. Oh, well, we have that data too. Okay. Why does it fade on Friday? People take profit. They don't want to go into the weekend. Holding positions. Oh, they're naked and afraid. Well, what does that tell you? Well, somewhere between here and here is a good time to buy a dip if you're a bull. Don't you stink? Mondays are the awesome days. Then it fizzles out for CAD Swissie in particular. Nothing happens. Okay, pull back Tuesday. Nothing happens Wednesday. But sometime by sort of the end of trading Wednesday, not the end of Wednesday, but maybe London close or New York close, you build up one more position. So you enter Wednesday and you exit Friday morning. Okay. This behaves differently than Aussie CAD. Now, if you're a position trader, here's the cool thing. You enter your trades Wednesdays or Fridays. Okay? So what if every Monday after a big rally, you jam your stop on your Friday trade? And now you're done. BTO? Trying out some swing trading? Nice. It's better. I'll tell you what, guys. I don't have a problem with scalping. If you like to scalp, 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 scalp. I love it. I love scalping. Every trade I make is a scalp into a spot, into a swing, into a position. Because pulling the trigger is always pulling the trigger. You got to do the best you possibly can. So every trade is a scalp, but with a directional strategy, right? With a directional bias. But if you do the math, and this is the part that scares amateurs, if you do the math and they're like, oh, I don't like math. All right, well, this is the problem. But if you do the math, scalping is only part of a portfolio of strategies that you need to master. And at some point, the days will be too long. Your back will blow out, your knees and ankles will blow out, your eyes will wear out. It's hard scalping. Yeah. You know what's easier? Buy on Friday and go away. What'd you do this week? I bought on Friday. Oh, so what's the strategy for this week? Well, by Tuesday, I'd like to move my stop to break even. And Friday, I'd like to buy some more. How about that? Yeah. Now, if you take it further and you're like, I wake up in the morning and I sell the Swiss franc. Now, this is called portfolio trading. You don't care what you intend to buy, although you want to buy whatever's strong today. So let's just say day by day, week by week, whatever happens to be strong is strong, and whatever happens to be less strong is less strong. But all you know is you intend to sell the Swiss franc. So every day you could organize your decision-making process to say, well, what is strong today? And you buy that versus Swiss franc. So today, maybe you don't buy the Canadian dollar, but maybe today you buy the pound dollar, or sorry, pound Swissy. You don't buy CAD Swissy today, but maybe you buy pound Swissy. Okay. So let me show you how to do that. Okay. we will turn commodities off, crypto off, indices off, and now we'll just look at Forex. We'll turn Forex off. Then you go Swiss franc, and you're like, okay, now you only buy this, 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 you only buy this. No, if it's not bullish, then you don't do it. You don't buy dips. You only buy dips. And so that could be one thing. So over a period of, let's say, 3 months, and you've made 150 trades, and 50 of them are still open. There, okay? Let's say you don't do this one. All right. So now you're long all of these, a mixture of all of these over the course of 3 months. 150 trades, 50 of them have been knocked out. 50 have been knocked out for small losses, 50 have been knocked out at break even, but the other 50 are open, and they're all long. Only based on individual day trades, individual market open trades, individual scalps, but they're all scalps and all day trades long. Now you have 50 open after 3 months of doing this. Move your stop to break even and look for the new thing tomorrow. What is your portfolio based on? Your portfolio is based on Swiss franc weakening. So imagine now you're trying to raise money for a fund. And somebody looks at your trading history. They're like, show me your track record. And you're like, sure. Print it out. And it shows selling Swiss franc on every single trade. Is it easy to understand your strategy? Yes. Now imagine you also had a fixed stop. Okay, which means every single trade you took, let's say, has a 100 pip stop. So the 50 trades you lost 100 pips. Cool. Then 50 pips are at break even, or we'll call it -3. It shows consistency, right? So now the only thing you need on your winning side is to average more than 100 pips, but you're going to be in the trade for weeks, ideally. So what if what if you took profit at 333? So you have a 3-to-1. Okay, let's just call it 300. So every trade you make has a 100 pip stop, a 300 pip limit. Every trade you made was selling Swiss franc. And you know why? Like, just simply, zero possibly negative interest rates by the Swiss National Bank. Okay, great. That's enough. You could explain it. You're like, well, that's why I'm short. Okay, great. And now somebody looks at your trading history, and your winners are 3 times larger than your losers. And 1/3 of your trades are break even. And you're consistent across the board. Imagine somebody reviewing your trades. Okay? Now look to the person on your left, look to the person on your right. They have normal track records. Random stops, random limits, random pairs in random directions. They don't have a fundamental bias. They make it up every day. Okay? Now think about it. If you're going to be an investor and hire a Forex trader, are you going to hire the one that has a clear bias, a clear strategy, a clear risk management protocol? And remember, if your winners, even if they're only 33%, your winners are 3 times bigger than your losers. Okay, you're going to be profitable under these circumstances. So, you see how rational this is? I'm trying to take the randomness out of your trading. And so part of the rationale, and I don't think an investor would notice this, but what if you generally bought on the same day at the same time? Okay. Are Sundays good days? Sundays to Mondays? Yes, they're good days. Volume increases. But you don't seem to do anything on Tuesday. But by Wednesday, Thursday, you're buying again. So what are you hoping to catch? Well, if you look at the shape of the week, okay, Sundays and Mondays increase, Tuesday, Wednesday decrease, Wednesday, Thursday to Friday, okay, increase, and then Fridays are down. Now shape this technically. Isn't this what you're trying to do? But now you're doing this on, let's say, a 4-hour chart. Daily is probably too big. Hourly, you could, a 1 and a 4. And so what you're trying to do is like Monday, Tuesday, Wednesday, Thursday, Friday. You get it? Okay, so we'll do Sunday. Here's the Sunday, Monday, Tuesday, right? Wednesday, Thursday, Friday, Sunday, Monday. A Monday, Tuesday. I know I can speak English. A Monday, Tuesday, Saturday, Monday, Tuesday, Wednesday. Does this make sense now? So where would the buying be? Buy and buy, buy and buy, buy and buy. And how do we know this? Buy and buy. Now, your bias would tilt this. Now, if you were a bear, okay, this would be the same time. Like this doesn't mean sell. That means less people are trading. Volatility is non-directional. So if this market was bearish and you were a bear, okay, sell, sell. And what happens is the trend is just the opposite. Most people, right? What's volatility? What's What's volume? Most people. Okay? Most people, most trades. Now, if the trend is down, most people are selling. If the trend is up, most people are buying. So therefore, let's say this was bullish. Now, cat is a dog with fleas, so maybe we'll switch this up. Kiwi's great today, huh? Okay, great. So what's the trend? Up. Great. Up, 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 down, down, buy. 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 Up, up, down, down, buy. It's not that difficult, is it? So how can you, of course it is, but it isn't. It is, but it isn't. What are the best days and what are the best times of day, right? Well, these are the best days for this one. And then look at Wednesday, Thursday is mediocrity. Interesting. So this is the best day. What is the best time? Okay, London open, New York open, and then fizzle, fizzle. Oh. So we'll call this pre-New York, pre-London, otherwise known as, right, Asia and New York. The best days are yesterday. Okay, this was probably the swing. Yeah. Kiwi is hot to go. Hottogo. Oh, hot to go. Or are you simply just selling Swiss franc and finding the winner chicken dinner every day, every week? Yeah, that's even easier. And that's called position trading. And the idea here is if you get that right, these trades you're in for 3 months. Holy smokes, Wayne. Well, how can you verify what does that usually work, Kiwi Swissy, this time of year? For that long? Well, it's just data. That's so easy to get. Why don't we just analyze every April, May, and June going back 20 years for Kiwi Swiss franc? Oh, that's so easy. Everybody's trying to please me, baby. That's so easy. Oh my God. Right? Oh my God. That is so easy. And no, it's usually not a good idea. We don't have seasonality on our side on this one. Amazingly, this is ugly. So this is up, and this is down, and this is sideways, and then down, and then up. So the best time to be buying this is between August and October. So obviously we'll say this is not August 1st. So why don't we say August 15th? And we'll call this September 15th. Somewhere in there, we want to see the market kind of bottom out and make a higher high, higher low. And in that case, we could hold this from the third week of August, really, till the even higher. You see? So what do you think? The third week of November? So this actually, this move that we have on Kiwi Swiss franc to the upside, okay, is usual here. It usually happens in February. And by the way, what this shows is we did have a move in February. So then March to April is usually down. And look, it was down. Dramatically down. So what we're seeing here is maybe a recovery or interest rate differential, just because Switzerland is slashing and burning interest rates and probably or maybe goes negative. I think the other day can correct me if I'm wrong or confirm if I'm right. Didn't Swiss treasuries go negative for like an hour last week? I think it dropped negative when I was in the Caribbean. You got to know these things. Vacation is not an excuse. I believe they went negative. The yield, not the interest rate, the yield went negative for like an hour. Bloop. I think it was Monday of last week, Monday European hours. So Monday morning, probably around 4:30 a.m. Mm-hmm. No, no one's going to confirm or deny. So week 52 could possibly be the bottom. 50, not, did I say 52? Sorry, 32. And it's interesting. It's a spike. So I'm combining. This is the second worst week of the year for this asset. Okay. And this is the worst, which is 6. So you can see up and then around the 6th, the down move occurs. Oh. Okay, so let's mark that on week 6. Okay. Oops. Things get bearish. There's a slight improvement, and then the top is usually week 8. This is week 8. Oh la la! It's so good to have the data, isn't it? Wowzer. And then that move tends to bottom out week 32, which is here, week 32. And then we have a slow recovery. Okay. It could be week 44, 45. There's another one at 48. So let's just combine these two. Isn't this nice? All right. So now we have our peaks and valleys. What we're trying to show here is right, and then up and then out. And so this is the typical shape of this market. My mouse will work with me. Okay. And somewhere around week 32, again, that's here, somewhere there. Remember, it's not to tell you that's the week. It's telling you that's the week to be prepared. So imagine now the market double bottoms. Okay. So maybe somewhere in the first leg, you take profit. Definitely by the second leg, you take profit. Why? Because now you're anticipating this move. And then this is telling you when you should take profit on that. Okay, you can see it ends the year kind of positive, and then we start this cycle again. So what do we know? What's happening now, the up is a fair bit unusual. So maybe we don't believe it. Maybe Kiwi's the wrong one. Okay, Euro's having a bad day, but maybe it's just for now. Maybe that's an opportunity. So what if we're like, well, what does the Euro Swissy do? Okay, well, and that's interesting too, isn't it? Okay, what's typical is the year starts negative, then there's a bit of a rally, and then there's a bit of a collapse all the way to somewhere in August. Oh, and look what actually happened. Down to down, up to up, and whoa, whoa. All right, well, the direction is absolutely correct. This must be the time of year Swiss National Bank likes to cut interest rates, huh? Or this is typically a risk off in Europe type thing, huh? But, or this is a time when Europeans do a lot of business with Switzerland. Whoa. So this is what we just looked at. Instead of looking at seasonal bars, these are weekly performance bars. So you're trying to be able to look at this and say down, up, and down. So now weekly, you start bearish. Okay, then you get very bearish, and then there's a nice recovery. Week 4, week 5, week 6, week 7, week 8, week 9, week 10. Then we drop for 5 weeks, and we rise for 5 weeks, and then we drop from week 20 to week 35. So you have to decide, do you want to be a buyer or a seller of this pair? And what I'm trying to suggest, because these are weekly bars, you can be in a trade longer than 15 minutes. You can be in a trade longer than 4 hours. It's possible to be in a trade for 6 weeks at a time, if you know what you're doing. And to know what you're doing, you have to have the data. And then you have to interpret the data, have an opinion based on the data, and then actually execute your trade plan. Or you're random. Yeah. Random. Wouldn't want that, right? Get the stock indices. Let's isolate this to U.S. stocks. ASX, no. DAX, no. Dow, yes. FTSE, no. NASI, yes. Nikkei, no. S&P 500, yes. Cool. Suggesting maybe up, maybe up, maybe up, maybe up. Lots of resistance, huh? Maybe up. Uh-oh. This is down. Up, down. It's more of a suggestion like, if we don't make the higher high, then get ready. How do we deal with negative swaps? I mean, on currency pairs where well, I think I know what you mean. USD Mexican peso, I don't trade long. But if I did, I would close at the end of the day. USD Rand, I do not trade long. But if I did, I close the trades before the end of the day, because the swaps are so incredibly negative. Now, if I'm doing a pair like euro dollar, now the differentiation between the two, the interest rate differentials, what are they worth? A pip a day? And let's say your average trade is 300 pips. It's irrelevant. Yeah. So it's relevant when the differentials are huge. Okay, so like your biggest problem would be short USD Swiss franc. But even then, it probably adds up to a couple of pips a day, and only charged at rollover. So you can trade it, and as long as you close the position before rollover, you don't pay interest. Or you hold it long term because you believe in the fundamentals, and it's a cost of doing business, but your pips should be worth way, way, way more than the swap. Yeah. So it's pretty rare that I worry that much. It's usually on exotics. The reason the exotics have that, well, illiquidity and spread because of illiquidity, and volatility because of illiquidity. all that kind of stuff. So I usually only do that in the direction where it works for me and never against me. Because by the time you add in the risk cost, the cost of risk, and the cost of carry, the potential reward is usually not enough. So I don't think I've ever gone long USD Rand. I have from time to time on USD Mexican peso, but only when it made sense. But if you looked at, same thing with Turkish lira, right? I don't own a lot of Turkish lira. But there have been times when trading peso, lira, and rand are a key focus. And that's because I want those things to work for me, not against me. Okay. So you need a lot of risk on. Okay, here's the stock market. What does the green zone represent? The buying zone. What are the two buying prices? This price and this price. Cool, that's it. Now, it looks easy, but I have an opinion on this. So it's much easier when you're like not down, maybe up. Cool. And so now what's the plan B? If then. If then. If then. If then. If this holds, well, let's call this resistance up here. Okay, cool. Is that the target? No, that's not the target, but that is resistance. Okay? Think you agree with that? All right, well, then that's a good call, Osamu. I'm just doing basic technical analysis here. Okay? So up. Oh, dang it. I want that in a different color. And I click the different color and then it doesn't change. Anyway, let's go back. Okay. So let's say this zone holds. Then, okay. And then we need this for tomorrow. What is the day target? Today's target is profit target conservative because we kicked off the lower buys of the buy zone. So M2 to M4. Our target is 5484. 5484. Not random. Okay. So this morning, this should have been your plan if you're a bull on the US stock market. And then you can use all the tools to help you make decisions. Things like the time of day to be trading. We know this is a good time of day. We know this is a good time of day. Okay. We also know this is a good price. Okay. And this is a good price. Okay. So look at this breakout roll reversal. Cool. And we also know, depending on which of those pivots act like support. So let's say in the European Open, okay, you were trading some variation of a breakout here. So I'm not sure where you went long, but you made your decisions, maybe on the breakout or on the pullback to the moving averages, whatever. Okay. Or in Asia, because you know that's a decent price. Now, you don't have moving averages, you don't have the vol. You have a little bit of vol, but the bigger vol is here. But you could be in this one, you could be in that one. If you believe this is the actual low of the day, then this is the high of the day. If you entered here, there's no mistake that that is your target. You got a second chance again at the right time of day. Go back and look at the implied volatility tool. It'll tell you this is the time of day, this is the time of day, this is the time of day to be setting up your trades. Yeah, cool. So if we go back to A, which is A or A, okay, then the target is A. If you bought here at B, your target is here. See, at the time, you wouldn't have known. Doesn't make the trade wrong, okay? Just up, down. This would have been your assumption. Where's your stop? Below support. Cool. So you could have bought at B, survived A, and now you have to adjust your target down or hold longer. Will that work? Oh, I don't know if that'll work. That's just technical analysis. Okay. So I have 2 trades on this now, and both one stop is at break even, negative $8.6, and the other one has $788.60 locked in. So the worst I can do is $800. Not bad for a vacation trade, huh? Vacation trade. Huh? Pay for the bar tab. Cool. Now we could go to no diggity, no Dow. Okay. So this circle here is my vacation trade. I know it doesn't look like a circle, but here it is. Little double bottom, higher high, higher low. Guess we can drop into a smaller time frame to make it a little more clear. Cool. You can see it, right? There's the buy. Okay. Here's the second buy. Oh my God, so beautiful. Okay. And here we are in our new week, and I have moved my stop. And this one, I have locked in $3,000. Cool. Nice. Lovely. What? That's the best vacation ever, isn't it? Best vacation ever. So now we're going back and we looked at these charts in the patterns. I don't think we specifically looked at Dow, but they're all kind of the same. What we need to see is a breach above, and then I'll move my stop again. On the 4-hour, we now have a 21.55 cross up. Very cool. So the funny thing is, what is that, $4,000? Remember, this account was only 36 grand a week and a half ago, and now it's 42,000, I think. So 10% is $3,600. So I'm somewhere between 15 or 20% up in 2 weeks with mini lots. Right? Is that right? Yeah, $5,200 on 3 mini lots. Yeah, that's 15% faux show. Way too much. Way too much. That's bad. Bad, Wayne, bad. But it makes the vacation a little bit better, though. I can get myself a brand new diamond belly button ring. So, what do you think of swing trading? Something that you can quite literally do on the beach. Oh, and by the way, the squawk is so good on the beach. Oh my God. Oh my God. The squawk, or what we call the headline news radar. Oh my God. So good because most of the time it's quiet. And then it just whispers something in your ear while you're watching the waves break, and you don't have constant noise, but every couple of minutes it's like, "Hey Wayne, did you hear the news?" Okay. Okay. No, those are yeah, Casella, I thought I answered all of that. By the way, we cover all of this at TRADARS every day. Every day. Like none of this. In fact, can anybody confirm, and this is where I'll need somebody to actually type something. Can anybody confirm that you knew let's say a month in advance? Okay? Two-part question. So, this is a complicated question with still a yes or no. Did anyone at least a month in advance knew that I felt like the stock market would drop in March, and somewhere the between the third week of March and the third week of April, I would buy it back? So both of those. How many people here knew at least one month in advance? You knew in January, you knew in February, and you knew in March, and then, you know, and you knew I was planning on buying it back. Denise says, yes, confirmed. Jim says, yes, confirmed. Meta, yes. Osamu, yes. Cool. Then that's how I was ready, willing, and able. Yeah. So there you go. That made sense to me. Wade says it. Now check this out. Look at the genius of my very complicated technical analysis. I bought it on the role reversal. Wait, my plan was what? I mean, it makes sense, doesn't it? Like that. Wait, that's it? Yeah, that's it. But the thing is, I had prepared in advance. So maybe you say, well, that looks too easy. Well, it wasn't easy. Okay. Because you had to be ready right here. Cool. Cool. So it looks like 1, 2, 3, 4, 5, 6, 7 people have confirmed they knew that at least a month in advance that that was my plan. Ojo says yes. 8. Okay, cool. Cool. Now I have some concerns, but I hope we ride the 5 from here. But if I can lock in 4 grand, why not? Abdul says yes. Was that 9 or 10? Yeah. Hamid? Yeah. That's 10 for sure. Cool. Right on. Well, therefore, it's just data. There's nothing special about me. Trust me. Okay. I have the data. Now, I might have some experience to carry it out. Okay, fine. But that's why I work for you. If you sign up at traders.com, I work for you. My Harvard degree, you're renting. You're like, hey, econ bitch. I'm like, sir, yes, sir. Tell me, what do you think about New Zealand? Dude, what was I reading the other day? There was one word in this economic report, and I think it was out of New Zealand. One word. And I'm like, oh my God, this has deep, deep, deep meaning. And I spent like 10 minutes, maybe 20 minutes explaining what the hidden message inside the central banker gobbledygook. Yeah, that's right. Huh? It looks easy now, but not when you're told. Yeah, for sure. And that's the hardest thing, isn't it? Where even in my own mind, in my own spirit, if you will, I'm like, okay, the stock market's going to come down in March. All right, cool. And then somewhere between the third week and the third week of March and third week of April, I want to buy a dip. Cool. I also know on average, and remember, average never happens, but on average, that drop could be 14%. But it might be 8%, it might be 24%, because that's how you get the average of 14. Usually it's only 8 to 10. I remember plenty of times in history, by the way, my friends calling me and they're like, you told me that you would tell me that the stock market was going to crash before the stock market was going to crash. And I said, yeah, that's exactly right. And they're like, but the market dropped 10% in 3 days. I'm like, yeah, are you buying some more? He's like, I should buy more? I'm like, yeah, why? Are you freaking out? He's like, yeah, I'm freaking out. It's down 10% 3 days. I'm like, yeah, but that's totally normal. So I'm buying. I remember this. This is a real conversation with a real buddy. Yeah. And he's like, oh, what should I buy? And I'm like, what's your financial advisor? I'm your friend. You better put a Cuban cigar in my mouth and get me drunk if I'm going to tell you. Yeah. I said, why don't you call your Merrill Lynch dude? See what he knows. But anyways, down is normal. Do I know how fast? No, and that's what was freaking my buddy out. 10% down in 3 days is, yeah, that's bad. So in March, did I say it was going to drop 25%? No, I don't know that, and I don't know the velocity. I just know what's normal. Down is normal, right as rain. Keeps me from panicking, right? And then I have this window of time where, okay, well, there's a bottom somewhere between March, April. I don't really know what that is. So I call it a window of time, and I create this little window of time. And then there I am sitting on the beach, and I say to myself, oh, Asia is opening. Wow. Wow. Asia's opening. I guess I should be ready, willing, and able. Asia opens down, 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 down. Total gap down. Bloodbath. End of the world. No, those are just orders that piled up over the weekend. And of course, they were negative. Okay, so they all got out based on their fear after Friday's close and whatever happened to them on Saturday. All those orders just piled up. So red, 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 red. And what did we hit on the 8th of April? Sorry, 5th of April, 6th of April, whenever this was. Okay. What happened there? Oh, we hit my price. The role reversal. It's also pretty gosh darn close to the annual projected low. Huh. You mean it's logical, Wayne? Uh-huh. Cool. So, now what do? Well, you tend to sit on the beach and let's see if I can go. Okay. And you watch your money. Hang on. Okay. You watch your money. Okay. This is the first drop. Okay. And then a nice little recovery. Ah. No, I front run the London boys. I don't wait for them to make their moves. That'd be reactionary. That's like the London breakout gobbledygoo nonsense. Wait for everybody else to make a decision and then jump on board. No, I'm a boss. I'm the one that makes the decision. I would never want to be reactionary. That's not my style. So anyways, look at the gap down I told you about. There's the Sunday open. I'm like, oh, good. Okay. So you could buy here, you could buy here, or you can wait a day or two because on this day, you're on a catamaran. And the cell signal is terrible on a catamaran. Yeah. All day on a catamaran. Oh my God. Okay. And then what? Then you enter a new day. Okay. And you're sitting on the beach at night with a cigar and a rum and coke. The stars sparkling above you, the waves crashing just mere feet from your feet. And you're like, oh, look, a double bottom of a double bottom. Now, this is Asia. This is London. So I believe I'm here. And then I went to bed. Lovely. Okay. Do 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 do. Do 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 do. Do 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 do. Do do do. Okay, now a million scalps are in there, huh? Yeah, a million. But you don't have to trade that way. Now, I'd like you to be able to do it because it helps with that pinpoint accuracy on your entry. So you can trade double bottoms of double bottoms, but remember that was all set up based on seasonality and fundamentals alone. Some people might just buy on the 1st of April and be done. How long are you going to hold it? Does anyone know? Let's say that was my strategy. Let's say I'm a lazy, slothy hedge fund manager or big banker. Okay. Like the guys I'm going to meet tomorrow, the guys that are trading trillions. They're slow as molasses, right? So what's their trade plan? Buy on April 1st. Okay. If that was my trade plan, when do I take profit? Does anybody know? I want the newbies to understand how well we have this dialed in, that you even know my answers before I tell you. Boom. JP got it right there. Done. By April 1st, take profit Canada Day. Done. That's it. I could be slothy like that. Is it accurate? Like, you know, did I use a 5-minute chart to get into the trade? No, didn't even use a chart. Could that work? You know what? That's how most of the market actually works. Now, this is the stock market, right? So some is like forever. That is possible. Yeah, that is possible. But in this case, if we're gonna like go with that trade, yeah, Canada Day would be the obvious answer. Now, does it have to be July 1st? Can it be June 15th? Uh-huh. Can it be July 15th? Huh? Or 14th if you for Bastille Day? Can it be Bastille Day? Yes. Can it be Canada Day? Canada Day? Yes. Can it be America Day? Yes. So that's when you pull out your annual pivots, your monthly pivots, you open up your seasonality charts, and then you can confirm the change in direction technically. Now, I could just bail July 1st, and a slothy person trading trillions, they could do it because no matter what happens, they're going home in their Bentley. Okay. Right? But we need a little more. So we want to use our charts. Our charts are only for entering and exiting trades. So, for example, July 1st could be the answer, but we might have to bail on June 22 because of obvious technical analysis to confirm the change in direction from up to not up. Doesn't have to be down, it could just be up and out. But there are many situations where this year is different than the last. And every day you're ready to take profit, and for some reason it keeps going up. Yeah. That's right, JP. So JP's got it. That's what I think. I don't know if that's going to be the case. Every year is different than the last. But at least I have intention, right, JP? That if I find myself in Panama with a straw hat and a white suit and beautiful brown shoes, and I'm strolling down the street, my phone's going to go bzz, 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 and it's going to say, "Oh my God, Wayne, look, yeah, it's September 15th. Oh, does that mean buy today? No, it says be ready to buy today. It could be 2 more weeks, but this is now where I do my analysis. So I have to, when I'm in Panama, I have to have a beautiful location where I'm staying with great internet. I brought my laptop with 2 external screens. So I'm in the Caribbean just recently with a laptop that has 3 screens. Yeah. By the way, don't take your Samsung Fold 4 to the beach. I have a new phone arriving tomorrow. $2,000 mistake. Wah, wah, wah. But anyway, so was I ready, willing, and able? Dude, would you drag external monitors with you on vacation? Oh, I would. I did. So, anyways, it's not about me. What I'm trying to say is this is how you want to be as a trader. Okay? I don't want to talk about it, Osama. Let's just say phones that fold do not like sand or humidity. All right. So I got to go, babe. That was real. I got to jump. Thank you for being a subscriber. Hey, by the way, go to youtube.com/@tradars and use the squawk. So what I was telling you is, if you're sitting on the beach, some people listen to audiobooks, some people read books, some people listen to music. Oh my God. You're sitting on the beach, you're looking out at the waves. Most of the time, everything's quiet. You only have one earpiece in, so you can still hear the waves and the gulls, right? Great. Great. And then all of a sudden, headline news just came out. You're like, what? Right? Swiss National Bank just indicates that they like the weak Swiss franc. And it just talks into your ear, and that's it. And then it goes quiet again. And you're like, oh, I just listened to the most recent news from the Swiss National Bank. They actually want a weak currency. Nice. Yeah. Cool, isn't that? Oh my God. So you could just sit there for hours, and every 2 to 5 minutes, you get updated about the most recent news flow. You just read an article on FX3. You just read a news article from somewhere else. Isn't that great? And you just get the headline whispered into your ear. Oh my God. That is a happy vacation. Huh? That's how you stay informed. So please, I don't even have it open. Please use these tools I built for you. I paid a lot of money for this stuff. Let's see, I have to go to this one. youtube.com/@tradars. Here it is. Please use this while on vacation. See, look how quiet it is. This turns green when it's speaking. So you don't even have to have it open. Well, you have to have it open, but you don't have to look at it. So you just open it, okay? And this is it. It's not bothering you. It's not in the way. It's not distracting. So now you could just be trading. Let's say, so you're not on vacation. You're just trading, and you can hear the news as it comes out as you're trading. Cool. Our plan yesterday was down and then maybe an up. Cool. We have the role reversal all printed out. You guys remember this? This is yesterday's plan for today. And now today's plan for tomorrow. Yeah. This was the plan I created 2 weeks ago. So anyways, an amazing tool. I guess what I'd say is I would pay money for this, but then I laugh because I've paid over $10,000 for this. So you probably should use it. I love it. Yeah, it's free. I hope you subscribe, and I hope you give it a like. But above all this, I'm wishing you love. Okay? I just want you to use it. That's it. I built this for you. Peace on earth. May the pips be with you. May your profits be above average.